the holy grail, which we think is achievable, it just requires a slightly different approach, is to take not just that transaction data, but all the data you've got around a customer, and combine that in a way that allows you to take off the burden of sort of managing money in inverted commas, but actually the burden of all the different things that you want money to do for you, and put it onto the bank.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Ricky Knox is my guest today on the show. A 5-time entrepreneur and the founder of international money transfer firm Azimo, Ricky continues to compete in fintech. His latest venture, Tandem, is a strong competitor in the UK challenger banking market. There aren't many entrepreneurs who keep coming back to fintech, and Ricky describes why he thinks financial services is so ripe for disruption. Tandem's approach to helping its customers make financial decisions uses AI, and we talk about technology's role in managing money. We discuss how he's handling growth and scaling, and how he's positioning Tandem with products and services to compete in the future. Ricky Knox is my guest today on the Tearsheet Podcast.
Hi, my name is Ricky Knox. I'm founder and CEO of Tandem Bank. I've actually been an entrepreneur for a number of years now. After a small stint in VC and an MBA, I built 5 businesses and a small fund. And most of them across fintech. One was telecoms, and sort of, I don't know whether it's culminating or but in building a digital bank, Tandem Bank here in the UK.
So what kind of masochist goes and creates multiple banks in the fintech space? Like what's your, that's a joke obviously, but what's your interest in sort of digital finance? Like why there?
Yeah, so if you look across all of my businesses, obviously they're all tech, and I'm just sort of love tech. I think that really is everything from like playing with gadgets through to actually, how the world's changing and sort of looking futurewards. But the other 2 elements were first of all, areas where I can make an impact and actually change the world for the better. So my telecoms business was bringing mobile networks to some of the world's least developed countries, and building some of the first mobile networks using secondhand recycled hardware from the developed world. So that's the sort of purpose side of things. And then I built 2 remittance businesses, so helping some of the world's poorest get larger money flows more cheaply from the developed world. And in banking, and then I suppose, the third bit, financial services, which hasn't all been, but really I like industries where there's a degree of complexity. Mm-hmm. There are plenty of industries out there, like construction's a great example, where there just is no premium on intelligence. The hiring, you would be doing the wrong thing to hire a super smart construction team, because you would have very little competitive advantage over your construction peers. Whereas financial services is incredibly complex, and just getting your head around some of this stuff requires you to hire a smart team. And I like working with smart people.
Well, so as you introduce yourself, Ricky, you said all of your experience kind of culminated in Tandem, and then you said, well, maybe not. But so tell me, where the idea for Tandem came, and maybe if there is that sort of thread that cuts between all those stops along the way, that'd be interesting to hear.
Yeah. So basically, as soon as I started working fintech, the high level thesis when we started, and this was really formed after I sold my first fintech business, which is a foreign exchange software business. But looking around, we were like, and we was me and my business partner, Michael Kent, we're looking around, who currently chairman of Azimo, and we're looking around and going, look, financial services is going to go exactly the same way as retail, as media, as these other industries that have been disrupted. Only we actually think it's going to fall harder because it's more like digital media than it is like than it is like e-commerce, because nothing needs to be delivered. It's all zeros and ones, and as cash is fading away, there's really very little link to the real world. It's an entirely technology-based industry. So, and indeed, felt that the role, the sort of simple view that was being taken at the time, which was, maybe we'll be disintermediated, all these great words being used, was very simplistic, because there's another weird thing about financial services, which is very few people, or I could argue almost nobody, want to buy their products. So what they actually want to do is be assisted by the money that they get from a loan, or indeed the money that they've set aside. They're either time shifting money, or they're effectively enabling the purchase of something. A mortgage enables the purchase of a home. And so, you've got a really weird industry where it's entirely digital. The customer doesn't want his products at all. And yet, you've got an awful lot of people sitting around in very high ivory towers thinking that they've got, they do run one of the most profitable industries in the world, and that they're all powerful. There's a lot that's wrong with that, and a lot that was going to break and fall down. Some of that's happened. So, obviously at Azimo and Small World, we participated in, the part of a wave that disrupted the payments industry, which was a very important wave. But that sort of soon came along to lending. Now that's been a slightly less successful disintermediation or disruption so far, because again, it was sort of failed to recognize what they were really doing was disrupting the origination part of the industry, but not changing anything else. So, hey, look at, we sell books online, or Amazon sells books online, but we can sell loans online. That'd be great. And of course, it coincided with the banks having no idea how to do anything online. And so, guys in the U.S., interestingly though, the disruption was actually, I have a friend of mine called Dave Nicholson, who invented Zopa here in the UK, who went, hey, why don't people, there's a borrower and a lender, why don't they get together directly? But that peer-to-peer lending legislation enabled a whole load of disrupting companies in the US, Prosper, et cetera, SoFi, who are basically just saying, hey, let's sell lending online. And that has had mixed results, because the challenge is technology has a massive pursuit of growth, and technology businesses and technology investors. And unfortunately, growth can be achieved very easily in lending, but it's most easily achieved by lowering your credit standards, in which case you get other problems that come later on. So that temptation has driven a few challenges for some of the U.S. lenders. But then at that point, and when we started Tandem, we were looking at financial services going, there's been these bits crumbled off the side, but nobody's really going at the heart of this, which is, the whole, the relationship that a customer has with his money, and how you could potentially provide services, whether they be lending or saving or payments or other things, with a much more sort of human-centered view, and thinking about the problems that person is addressing underlying in their life, whether it's buying a house, buying a car, or whether it's just thinking about their retirement, but all of those much more holistic problems, and address those through a digital experience. And I think that's so that's why we decided to start Tandem. And we think that banking itself, various banks that sort of constitute largest industry globally, $2 trillion of revenues globally, will be significantly disrupted, and there'll be a whole swathe of new players that come through, and our vision is that those will be disrupting the experience completely. Now, some of my competitors primarily just want to make banking a little bit better. We think that banking as it exists today is a waste of time. It shouldn't exist. So we want to completely reinvent it, and
so can we talk about
do what they want to do.
About that point, I guess, and how you differentiate against some of your competitors, because the UK, particularly for our US listeners, the UK, I think, is one of the most fertile grounds for watching sort of what the future of digital is having, definitely more than the US. Can you talk about, I guess, how you're different than the competitors, and specifically towards what you just said now, which was that you kind of want to make banking going away. You're kind of redefining what banking is or what financial services is. Can you talk about that difference?
Sure. In the UK and now starting in the US, there's been the sort of first wave of disruption in digital banking has been around the checking account or checking account for the Americans. That disruption has come from the fact that actually, when we were first running around talking about this plan, everyone's like, oh no, everyone's very happy with their bank. And we're like, actually, we just don't believe that. Like, this is one of those situations where, first of all, the evidence given by the banks was no one's actually shifting accounts.
Right.
It's
hard to leave, but they're not happy, that type of thing.
Exactly. And so it's like, actually, lots of fear about it being a total pain in the ass to start a new bank. And some of those fears justified and some of them not. But actually, that didn't mean they were happy. And so what you're finding is particularly the day-to-day spend experience and the sort of mobile card combination has proven incredibly powerful, whether it's for us or for other people, recruiting hundreds of thousands, millions of customers in incredibly short time frames. The last new bank in the UK was Metro Bank, which is a branch-based model. It took about 6 years to get to 1 million customers. It's taking, incumbents, including ourselves, 18, 24 months to get to 1 million customers. And then it's actually accelerating from there rather than decelerating. So I think the first bit is just, taking that payment and day-to-day banking interaction and actually renewing it, which I think is, as I said, is interesting, but it's not the fundamental piece. So the fundamental piece is about, unfortunately, it's much harder. And this comes back to something you mentioned before, I call on sort of why Tandem is focusing on AI. Banking ultimately provides a really rich pool of data, but interpreting that data is far from easy. And you've seen an entire industry of mostly failures around sort of what it was called personal financial management, because actually it turns out translating your transactions into something that's meaningful for customers is actually quite a difficult thing to do, because it's so full of exceptions. But ultimately, the Holy Grail, which we think is achievable, it just requires a slightly different approach, is to take not just that transaction data, but all the data you've got around a customer, and combine that in a way that allows you to take off the burden of sort of managing money in inverted commas, but actually the burden of all the different things that you want money to do for you, and put it onto the bank or onto the app, where it can start to not just sort of go, hey, here's a nudge or here's the next best action, which is something I've heard bankers talking about for ages, which is basically like, what shit can I sell you next? But actually go, what's the problem you're dealing with? Okay, here's your whole financial context. Here's if you want to do X, then we can fit it into your money like Y, and we can facilitate it to this extent with loans or with savings or whatever it may be. And by the way, here's the trade-off between loans and savings, because time shifting money is expensive, and involves an interest rate, etc. And put that in dollars and cents, not put it in percentages, which customers hate anyhow. And so there's quite an interesting opportunity there to reframe the role of the bank and to turn it into essentially a sort of money assistant that helps you to navigate life lived through money. And there are tons and tons of areas to go at there, and I suspect people will still be reinventing this in 10, 15, 20 years time. It's not something that's going to happen overnight, but there's some pretty exciting differences. And so Tandem is, more than any of its competitors, a data business. We are the only people who started with open banking. It's a big new exciting thing that's been happening in Europe, where you can with what's now just a print of your thumb, share all of your financial data for the last 12, 24 months with another financial institution or indeed another fintech. And so we're building off the back of that. We're the first people to arrive to market with a solution built off that basis. And we've continued to lead the market in terms of actually helping you make those understand your money in the context of the spending and saving and borrowing that you might want to do.
Well, so does that also filter down to the product level? Like I know you guys, there's been talk about you guys working on a mortgage. I guess, how does that, that approach towards data, that openness to open banking, how does that reflect itself in your product development cycle and what the end product looks like to the end customer?
Yeah, so I mean, an example, and this is less, I'll talk about the mortgage one in a moment, but on the savings side, so what, almost all the digital banks in the UK, and I'm sure the US guys will start as well, do is a bit what Acorns does, where they have roundups where they take transactions up to the nearest pound and set it aside and can invest. You can invest that money or indeed just pop it into a side pot, which in the case of most of the banks doesn't pay any interest. It's essentially just a little side pocket of your current account. And that's great in that it helps you start to build a savings habit. But there are a couple more phases there. One is starting to accelerate your savings. The third one's actually saving successfully towards a goal. Tandem does a full cash flow forecast and permits you to start setting money aside and but also to accelerate that savings habit towards a goal, understand what you can and can't do in the context of all of your cash flow analyzed over the last 12, 24 months, and maximize your saving. If you're I don't know, like me, you've got a particular savings objective, and saving, 20 pounds a week is not that helpful, but you want to save, £1,000 a month or more, towards a specific goal at a specific time. And so we'll help you with that whole process. And so that understanding of your cash flow is pretty central to everything we do, which is, what of your expenditure is variable, what of it's fixed, what does that mean about how much you can set aside in that context? So that's sort of how we take that additional data. And by the way, we're looking at your main checking account, not looking at just your Tandem account, which all the other guys would be doing. So we're connected to your Barclays, working in tandem with your Citibank account, your Barclays account, to allow you to continue to analyze stuff that you're doing in that context as well, and indeed to control your Barclays or your Citibank account via open banking, where we can push transactions out of that account as well. But so when you're talking about product, it's like rather than just rounding up, for example, my Revolut transactions, I can actually understand all of my context and see how much money I could save overall with a more complicated calculation. When it comes to mortgages, we can do something similar. We can actually detect your rent, understand how much you're paying in rent today, understand obviously your overall budget, how much is going out, how much is coming in, so what your free cash flow is, and what your affordability, what you could afford to pay on a mortgage. We could then reverse that out into, okay, and what size deposit do you have? What sort of mortgage rate is that going to give you? What does that translate to in terms of the amount of money you could spend on a house today? And then we can start to compile whether, you actually in practice should be looking at shared ownership because, you're going to be able to afford a mortgage of, $50,000, $100,000, in which case you're probably not going to be buying a house in the UK, because you can't even buy a garage for your car for $50,000. So, what are the options we have there? Or, you've got 500,000 and does that allow you to get your dream home, or do you have to stretch? Which areas should you be looking at? Is that inside, outside London, et cetera, et cetera. So you can get, now we haven't developed all that. That's sort of one of the product processes we're in right now. It's kind of figuring out how much of that we want to own, how far deep into that process we want to drive. Because obviously it's a pretty critical decision and you could go an awfully long way, but the ideal is that we partner up with other players who can sort of take over a part of that as we move down that journey and some of our friends in some of the other sort of property tech businesses here in the UK could sort of help with that sort of selection process and move through the rest of the house buying journey. But we certainly can be helpful in the, like, what the hell can I buy? What the hell can I afford? Question, which comes up front. That helpful?
Yeah. No, it sounded like I lost you at the end of that answer.
Okay.
But can we shift now into, you talked about some of the challenges in growth. Oh, you didn't talk about the challenges. I'm interested in hearing about the challenges.
Yeah.
Can you talk about how the industry is growing? You guys have grown a lot. Like, how do you continue to stay, I guess, ahead from a staffing point of view, from a product point of view? Like, how do you continue to push on the envelope?
Yeah, I mean, look, growth is always tough in that even just acquiring enough, people to continue to keep your service levels high on customer service and to continue to produce, to sort of manage the operation in a scalable way. And the key thing for us is just tech, and we have continued to expand and scale our tech team over time, and we try to do as much as we can with technology and not to build in manual processes and indeed to the extent where we will sometimes we have to just tell customers, I'm sorry, we can't serve you if we can't do that in a straight through way. So a lot of it's about saying no and figuring out, who you're going to say no to, because this guy or girl is not going to, be able to, for example, self-serve via iOS, Android. So, if you want branch service, we're not for you. If you really want to do just phone service, we're really not for you either. If you want to have online banking access, I'm really sorry, we're not for you. So it's about thinking about how you keep things focused and scalable so you can deliver a great experience for that segment of customers that you're focused on.
I want to go back to something we discussed in passing early in the conversation about AI. You guys just made a senior hire in that function. Can you talk about, I guess, the role with somebody heading that and steering that, driving that, like what the role of AI, I guess, for the future of Tandem is?
Yeah, look, I mean, there is very little limitation on which areas of banking can be assisted by AI. It really can play a role, right across the business model and right across the organization. There are, ultimately a bank is at some level a sort of risk management organization where you're managing, essentially credit risk, which is obviously default risk on your assets. So, you need to make sure that the money you take in is lent out in a safe way that is not going to incur some losses, but not too many losses relative to the pricing of the product. And AI and AI modeling can be incredibly helpful in the credit process, but they can also be incredibly powerful in managing fraud risk, in managing money laundering risk, and indeed even in sort of operations. So whether that's what you'll see in some of the other players is the main place that AI has been deployed is in customer service. We actually don't deploy it there, and that's a conscious decision.
And why is that?
Because you end up with we're already slightly dehumanized as an app-based bank, and we want, if people want to get hold of a human, we don't want to do the Google, Amazon thing and hide the human, hide the phone number, and try and minimize the flow into that number. What we want to do is actually get people access to them, give them human customer service, point them back into the digital experience, but actually give them the human contact that they want. So going in like 3 defense layers of AI, where there's some non-human answering you, is probably not what people are looking for when they call our number or press chat on our app. They ideally like some human contact. Now, that's not to say that you can't search our FAQs in an enhanced way or get some automated response if that's what you're looking for. But we don't. We haven't sort of buried that behind a wall of bots before you can speak to a human.
Yeah, you read some of these like disaster stories where people who needed help but can't get it. We have time for one last question, and I'm kind of curious, like where your head is as you're starting to think about 2020. Probably, like what are your biggest priorities as leading Tandem into next year? Like, what are you focused on? Can you talk a little bit about that?
Sure. I mean, short answer, kind of one word, is growth. It's about internationalization, particularly for us. We've already announced late last year we had a partnership going into Hong Kong, which will be live before the end of the year. We got significant additional growth plans coming in 2020.
And how do you choose geographies? Are you looking to replicate sort of where your competitors are going, or taking a different tack?
I think it's fair to say we're looking at both. I mean, a lot of our competitors have gone into the U.S., but if you look at the drive to that, and in fact, to drive the whole U.S. market, if you were extraordinarily cynical, you just say, look, interchange there's only one word, which is in the U.S. you can make a 2% interchange on debit. You can't do that in Europe. It's restricted to 0.2. All of our loss-making compadres in the UK would be massively profitable at 2% today. Massively profitable. Like if you just made that one change in the financial model, bang, the whole UK neobank sector is smashing it already. Proper supernormal profits. So in the US, they have 2% interchange. They're going over there to get their 2% interchange. The whole model works much better. And I think there's a few things that they're missing in the US, because that's and our model is slightly different because we have got interchange as a major revenue line, but we also do a lot of lending. So interest rates and margin are really important to us as well. So that is a big delta between us and the other guys. We don't think you can reinvent banking while sort of marketplace outsourcing lending. You've actually got to reinvent the lending piece. So that's an important part of our business model too. But so we look at we look at where they go, but ultimately we look at how our business model translates across different markets. And so that has, in part driven the move to Hong Kong. Some people would generalize and say, hey, so very competitive. Actually, Hong Kong, highest profit per capita banking market in the world. Very interesting market.
And you going in through a partner or going direct?
Kind of both. If that makes sense. No, I mean, the intention is to go indirect. There's some partnerships on the way in, but ultimately we're looking to expand and acquire licenses in different parts of the world and expand that way. So whereas obviously the US and the sort of the logic of interchange has then driven, I got to get in the US, has then driven, oh shit, I can't actually get a license in the US, has then driven, okay, let's partner in the US, rather than people going, oh, let's partner, and then, oh, look, the US has good partners. I think it's come the other way around for N26, Mondo, and the others.
Ricky, it's been great talking to you. Thanks for joining us on the Tearsheet Podcast today.
Been a pleasure. Thanks very much.